You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycle News and Views on Cyclesman.com. Welcome to the show, Tim.
Hey, Jim. Thanks for having me again, man, as always.
People have been watching the markets very closely. A big sell-off day, then a big positive day. Is this the kind of cycle you expected to see right now?
Yes. You know, we had the decline, and so far so good. You know, it's unfolding pretty much as expected. I actually, I really think that, and I say think, I want to say that another way. According to my read, I see it as that we had a Dow theory primary trend change with the violation of the August high. There is an interpretation of Dow theory that says that you would need a Dow theory non-confirmation on the top side before a violation of a previous secondary low point before you had a valid Dow theory non-confirmation. But I think, and I'm trying to be fair. I'm struggling here in trying to be fair, but in my read, it's the violation of the previous secondary low point, which happened by both averages. So as I see it, there was a primary bearish trend change. Cycles have nothing to do with Dow theory, but following that violation, we moved into a lower degree cycle low, which meant that we should bounce, and we have. And so the bounce is no surprise. How much further it goes, I don't know. I think it's counter trend, and it's going to go till we get another short-term sell signal, and that's going to tell us a whole lot. That's going to tell us a whole lot what happens there. But from my read of Dow theory, like I said, I believe that we had a bearish primary trend change. And the only question is that has been brought to my attention is that, we didn't have a non-confirmation at the top before the violation of the secondary low point. And then I heard somebody else say that, that August wasn't a secondary low point, but, they're wrong on that, just outright wrong, I think.
And what would be the trend from this? Just the short-term reading of the charts this week was a big sell-off, and the same people who sold those are now buying the same shares at a lower price.
I'm sorry, I had a hard time hearing you say that again.
I said, well, what happened this week was, I believe, is that we had a big sell-off, and the same people who sold those shares are buying the same shares only at a lower price.
Yeah, and I have no comment on that. I don't know about that. I mean, like I said, from my world, Jim, I strictly see it as a cyclical bounce, a shorter term bounce. If, one of the averages were to move to a new high, then that would give us a Dow theory non-confirmation. And I actually wrote in my letter, I said that one thing that bothered me about the September high is that we didn't have a non-confirmation. Most 4-year cycle tops have a bona fide Dow theory non-confirmation associated with them. And again, cycles have nothing to do with Dow theory and vice versa. It's just that, they're two separate tools. When you overlay the two, you see that there are non-confirmations at 4-year cycle tops. And so that has bothered me. And so I won't even rule this out. Back in 1999, Richard Russell called the top with a Dow theory the primary trend change. When it occurred, I believe it was in September of 99, and then the averages, or the industrials at least, bottomed in October and moved to a new high into January. And the transports continued to lag, and it created a longer-term non-confirmation. People said, well, Russell was wrong, the Dow theory doesn't work, and so on and so forth, and the Dow theory worked perfectly. And so what I'm saying is, though, even though that we've had a primary trend change, do we see something like we saw in late 99 and early 2000? Well, I guess that's possible. I mean, there's a precedence for it. It's happened before. And so what I said is, it's detective work. It's one step at a time. I have to see what happens following, this little cyclical low with this bounce. I don't know what's going to happen, but when it does, that's going to give us our next piece of evidence. As it stands right now, we have a Dow theory, in my view, we have a Dow theory primary trend change, and and a lower degree cyclical bounce. And what happens from there has to be assessed once that data is conclusive.
We'll have more with Tim Cyclesman Wood right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Tim Cyclesman Wood. Just before the break, you mentioned that we would be seeing a big trend change. What would be evidence of that?
Well, the joint violation of the August lows. According to Dow theory, it is, the moving above and below secondary high and low points. And like I said, we had a joint close by both averages. And according to my read of Dow theory, the August low was a secondary low point. And, I get it that some people say that you have to have a non-confirmation before a move below a secondary low point for a change. I get that. But still, we had the violation of the previous secondary low point. And so, like I said, according to my read, we have the trend change because both averages, broke below the, August lows on a closing basis. And that's the root cause for what I'm saying is the trend change.
What are the DNA markers you're still looking at very closely?
Still watching that data. This is one of them. And like I said, it's, you gather evidence. And, and it's like, it's like, think of the balance beam scales. You get a piece of evidence and it's positive or negative. And you throw the positive on one side and the negative on the other side. And as you get the evidence, you throw it in the scale. And, they weigh out like they weigh out. And all that is, it's detective work. You try not to have an opinion. You try to just weigh the evidence. And this Dow theory this Dow theory primary trend change is a big piece of the evidence. And then, like I said, once we see what structurally develops with this bounce, then that's another piece of evidence. It's going to be positive or it's going to be negative. If it's positive, well, then maybe it kind of outweighs what we have right now, and the picture changes. That's not double speak. It just, it is what it is. And so, what if both averages move above the September high here? Okay, great. Then the Dow theory trend change has been nullified. Well, what if one average does and sets us up with a even longer term or gives us the non-confirmation that was missing? Okay, well, that's great because then, that means that further validates this primary trend change. But then what if it turns down before we make a new high? What if we do violate the October lows up on this rally failing? There's any number of possibilities that can occur, and you have to assess each and every one of those independently once you see what develops, what the next piece of evidence is, and we don't have that yet. We have to see what that evidence is going, what it's going to be at the time it's presented. So that's what we're watching.
Does that translate into being a scary time right now to make major investments?
Jim, this is absolutely thin ice time. This thing is very, very, very scary. There is no question about this. A Dow theory bearish trend change is serious business. I realize we have a rally going on. I realize we're up 250 points as we speak, but that doesn't change that we have the Dow theory primary trend change. We were expecting this short-term bounce following that event. And so, the fact you're up 250 points doesn't nullify that Dow theory primary trend change yet. So you're darn right. This is serious. It's serious until we see evidence that can negate it. So you go with the evidence at hand.
The advice that you're giving people right now in your newsletter?
Well, we're assessing all of like I said, we're throwing the evidence in the scales. I would not want to be on the long side of this market for nothing. And as far as the specific advice is, I can't give specific investment advice. I look at the market and tell what I think the market is going to do. And that's what I do in the letter. So for those details, I can't give out that subscription information, but I can tell you this market is very, very dangerous here.
Tim, how can people get your newsletter?
Cyclesman.com. And, the latest is in the updates. The current expectations are in the updates. I do have some expectations there based on some statistics and some things we're looking at. And then starting Monday, I will start working on the November letter. And, we'll have another week's worth of data next week to make an assessment, which will be very timely, very important. But the letter will be coming out week after next, and I'll have the latest and greatest there. But this is very critical and very serious.
Tim, thanks a lot for chatting with us.
Thank you, Jim.
My guest has been Tim Cyclesman Wood. You can find his website at cyclesman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. We're also up on YouTube. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.